I thought it would be an interesting time to ask the question, is the flight to quality over? And what's next for traditional safe haven currencies like the Japanese yen and the Swiss franc? The backdrop of this, as we know, is we've seen some crazy price action recently, and this week we're seeing a bit of a rebound in stocks,
right.
Almost a 2% move yesterday to the upside here looking at SPY. And you like to talk about tape action a lot. We're seeing a pretty solid bottom there, at least for now. And so a lot of things in the equity space and in the currency space, and we'll get to the dollar yen and dollar franc later, but kind of a lot of uncertainty seeming to, in terms of a U.S. market crash, starting to deflate a little bit. And starting to ask the question, are we back? Are we okay?
It'll be interesting. This is interesting because Friday we had options triple witching. So we got this huge bid right into primary technology, the usual suspects, at the end of the day. And they rallied, the NASDAQ, I don't know, 130 points. They rallied SPUs 35 handles. Wow, right at the highs. And that's often a tempting place to sell a few because, all right, you know it was just the noise of options expiration.
Sure.
But Sunday they took a big bite. I think NASDAQ SPUs opened 20 higher and rallied.
Oh man.
Rallied another 20 handles, came off a little bit, but then just Monday, punched through it. So it'll be interesting to see as we unfold the rest of the week if there is a spot traded a little bit lower last night. We're back to unchanged, if not higher right now, as we go through. So do I think that the bulls have a little bit of grip on the bears right now in the markets? Yeah. But if it is just a little bit of people stuck the wrong way, it'll be interesting to see if the legs can extend through. And again, that's irrespective of news cycle.
Right.
Because there's nothing that has said, I mean, these 2 days have been a big move in equities. What's dramatically changed? And the answer is nothing. You really can't. I mean, if anything, it's gotten a little bit more uncertain with the Middle East, with Russia, with other pieces. So,
but yeah, kind of like we talked about with the mixed PMI data, what does the market grab onto?
Right.
Yesterday, it was that Trump's tariff threats a little more targeted than previously expected. I know the news
side,
and that's what's funny. We have 2 bullet points here. So the headline was that sector-specific tariffs won't be included in Liberation Day on April 2nd. But then also yesterday, he truthed out that that there will be a new tariff on Venezuelan trade partners that trade with Venezuela with oil and gas, China being one of the main ones, and really no movement there. So I guess even though we don't necessarily want to tie ourselves to news stories, we have this April 2nd deadline, and I'm very curious to see if all of this tariff wind is died down or if there will be something, because negotiations are ongoing. We've seen it before. Could we see it again? Radical
we're going to be
new.
having this same knucklehead talk in May, June, and July. Absolutely.
And but we've seen,
and we'll just have diminished returns. And I think they'll look a little bit more structurally at, is a dollar, as the difficulty of this exercise goes in terms of both governments and companies planning, is the dollar a place where I want to park my assets?
Regardless of
holding the currency and then investing it. And that will be the bigger discussion, irrespective of if the SPUs normalize back to, 6,000 or not. It'll be interesting to see if that dollar selling continues regardless of that. But
yeah, we look at
right.
one of our traditional safe haven currencies, safe haven just meaning that the yen tends to get more demand during times of uncertainty, especially when it's something that's more U.S. specific, like the U.S. market risk we saw earlier. And didn't run correlations here, but we were just looking at the stock, the U.S. S&P 500 graph. This dollar yen the bottoming in the beginning of March looking pretty similar.
Right.
Now we are back in the last 2 weeks, up over 2%, up through 150. And those were 5-month lows we hit in the beginning of March. So we're seeing a kind of a similar graph here, similar story. Do you see these markets moving in tandem any further?
You know, I don't think the yen has necessarily acted in its traditional safe haven manner.
Interesting. Because we did see it. It got a bid at the start of March.
Right.
But yeah, that kind of lost a lot of momentum pretty quickly. Didn't make any drastic moves.
It did, but I mean, yes, but we were already down in the 150, the low 150s. So we got 3 handles of down move.
Right.
We're still not back to last August when we had the carry trade unwind. I still think overridingly, even though dollar yen isn't doing it today, it's still tracking treasuries.
Right.
So I think dollar yen is going to be tough. As much as when we go back and look at the big chart, what's moved the most over the last 5 years? It's dollar yen from par to 160, 170, 68. We're still at the rich end of things.
Yeah.
We're still at extremes. I mean, again, 150 is rich. 63 cent Aussie is rich. 57 cent Kiwi is 63 cent Aussie is cheap.
Cheap, yeah.
57 cent Kiwi is cheap. So I think we're off of ultra cheap, but we're still looking at relative interesting places. So I don't know. I don't know if the rally in SPOOs and the fall in bonds is enough to override dollar weakness.
Sure.
And see the yen trade higher. I think if you think the dollar is maybe structurally put in its highs, this is an interesting inflection point, I think.
I agree. And wanted to take a look at our good friends at Bloomberg did a little research on implied volatilities from options pricing. And here seeing a very consistent fall in implied volatility in dollar yen, and then even looking at euro franc implied volatility. So I bring this up only to say that now at least expectations of big swings in these markets, which tend to only occur when people flock to them in rapid succession, are dropping. So what do we take away from this? Do we take away that that this is a trend, or that we would only get hit harder if we did see a sudden flight to quality once more because people aren't expecting it?
I think this speaks to the natural ebb and flow of vol, where there's, again, the bottom's been put in. We've tested both sides of the range, and there is not, you're seeing the vol skew kind of normalized too. Because you can see, what's interesting in FX, you can see both, traditionally you always see put skew in equities.
Right.
In currencies, because remember, you're trading one thing against another.
Exactly.
You can have vol skew on your U.S. vol skew isn't always to the upside or to the downside. It can be dynamic. And I just think both skew started to normalize, then vol came in. And I think this is speaking to that we're probably going to have a little bit more confined ranges.
Okay.
Which is good, which means the level should probably hold a little bit better. So if you want to trade both sides, you're going to be a little bit more comfortable. And this is saying that this reinforces that, again, those 1 standard deviation daily ranges will take time to catch up. This is already saying this is telling me those are going to come in. So if I use those wider ranges, 80 pips in the yen, 50 pips in the euro.
When you see them.
Yes, I'm getting a pretty good bite on.
Yeah. Great analysis. I appreciate that. And the last piece that I thought very interesting here at tastyfx, we have IG Group client sentiment. Taking a look at these two markets, both have U.S. dollar as the base currency and yen and franc as the quote currency.
Right.
So easy to compare these two. Seen very different client sentiment with the dollar franc still very dollar bullish, whereas this yen right around 150, we're seeing a majority of IG Group U.S.
Clients short.
clients short. expecting reversion to more historical means, but by certainly no means recent price action.
Right. So again, this is like the Commitment of Traders report put out in the futures market. It's a snapshot into where retail is positioning. And you can use it two ways. As a momentum, okay, I want to go with the herd, or the herd is always wrong, so I want to, and then you talk to a contrarian there, oh, the market's always mispriced. It's an interesting insight into, and we see these change over time a little
Definitely.
bit. I think it's an interesting paradox. What this tells me is that neither of these are true flight to quality anymore. They're not working as that mechanics. If equities trade down 2%, dollar Swiss should be off 1%, dollar yen should be off at least 1%. And we rarely saw that take place on those. When we had those capitulations last week, really where they hit equities really, really hard, we didn't see that slingshot move in Swiss. Yes, we saw them, the dollar weaken a little bit, but not that much.
Interesting.
And even today, dollar Swiss after having a decent run up yesterday, is getting sold a little bit today.